3, 4. Okay, hello everyone. Thank you for joining our panel discussion today. My name is Omar Nokta and I cover shipping equities for Clarksons Platou Securities. On this panel today, we're going to be discussing the product tanker market and going over some of the dynamics that are ongoing, some of the recent trends and the sector outlook. These are obviously very interesting and historic times, with the tanker sector having really a front row seat to what's going on with oil production, refining capacity, consumer consumption, and all that. So I think this will be a very good and interactive, solid panel. I will introduce the panel participants, and then we'll go right into the discussion. And as this is a virtual discussion, I will be raising topics and asking questions directly to one particular panelist, but then encourage everyone or others generally to jump in with their thoughts as well. So, first I'll just make a quick introduction. Today's panelists, we have Tony Gurnee, CEO of Ardmore Shipping, U.S. listed company, owner, operator of MRs and Handies. We have Jacob Meldgaard, CEO of TORM, dual listed between Copenhagen and the U.S., owner, operator of LR2s, LR1s, MRs, Handies. We have Robert Bugbee, president of Scorpio Tankers, U.S. listed, owner, operator of LR2s all the way down to Handies. We have Craig Stevenson, CEO of Diamond S Shipping, U.S. listed, owner-operator of Suezmaxes and MRs and a handful of Handies. We have Carlos de Mottola, CFO of D'Amico International, Italian listed, owner-operator of LR1s, MRs, and Handies. And then finally, we have Eddie Valentis, CEO of Pyxis Tankers, U.S. listed, owner and operator of MRs and small Handies. So with the introduction out of the way, just wanted to kick off the discussion. Obviously, a lot happening in the marketplace today. And I'm going to direct the first question to Robert and encourage everyone to participate as well. Across the globe, there is, millions of people under self-quarantine. This is clearly affecting how you're operating your businesses, both onshore and at sea, but also, thinking about a big picture with what the use of cash. What do you do with the cash that's coming in? And so maybe, Robert, if you could just give us a perspective on how are you guys at Scorpio handling the current dynamic with working remotely, and then also thinking about the outlook with respect to the cash coming in?
We've been working remotely now for quite a while. We started off taking down our Asian offices some weeks ago, and in fact, a couple of them actually have been back up in the last 2 weeks. And the Europe and US offices are down, but so far, Touchwood, everything's working fine remotely. Technology is good. We're focusing really on, the crew and the people, trying to keep the people safe, the crew safe, and things operating. I think that's really where a company, we have to really strive for the A+ grade right now. All of us here, when we're focusing with a primary concern over safety. When it comes to the balance sheet, etc., I don't think it's about grade. I think it's just simply the industry. It's about pass fail. It's, we either are going to have enough liquidity as a group or a company to get through this position, or we're not. It's not about making, short-term maximizing of share value. It's about taking in. We've got extraordinary earnings right now, the same as everybody else. And that's what it's about right now. The days and hours are spent on operating the company and keeping the ship's crew safe, keeping the ships working and taking the cash flow in. And we'll deal with maximizing or allocating cash flow at a later date.
Yeah. Anybody else have a comment to join in?
Yeah, it's Craig Stevenson. I think well said, Robert. I think the first and foremost, we need to look after the health and the well-being of our employees. I think the industry is I think, showing a lot of value by being able to operate from home. But that's more or less standard fare in the shipping industry. It's a little inconvenient, but we can continue to operate our businesses out of the office, if you will. Insofar as the cash flow side of the business, I think business is fantastic today, and so you need to maximize the amount of net cash flow that you can bring into the company, and operate as good as you can. So I echo Robert's comments. I think they're spot on.
You know, there's been some discussion on, you know, being able to replace crews and having the crews go on and others go off. Is that a problem that you're all facing right now? Is having crews on board longer than they otherwise would be?
Yeah, I can take that. I can take that one, Omar. So yeah, clearly, I think most of us need to address that currently a dialogue with a crew about being out longer than what they had anticipated and what we had anticipated, in order to keep them safe, actually, and to keep the operation safe. That's the name of the game. And obviously, currently, I think most people understand, both on the side of owners, operators like ourselves, but also our good colleagues that see that this is an unprecedented situation and everybody's working to be flexible. So far, yes, it's a puzzle, and we are holding back on crew change simply for the safety of everybody. And let's see how this situation evolves over the coming weeks and hopefully not many months, because obviously there is a limit to how far we can stress our organization. But currently, I don't see it as something that is hampering our business. But it is a big puzzle, and I think as both Craig and Robert rightly said, we put safety first. So under these circumstances, we just need to be really on our toes and every day adjust to new situations and new restrictions.
Yeah. You know, as Craig mentioned earlier, and we are obviously seeing it, the charter market is on fire. Especially on the crude tanker side, rates have gone above 100,000, marching right back towards 200,000 for the VLCCs. There's a lot of talk about floating storage. Maybe Tony, I'll go to you. You know, how do you see the recent developments in the crude trade making their way into product? Are you seeing that strength in the product market at the moment?
Yeah, I mean, rates are continuing to, you know, kind of dip a little bit, but then push right back up again. And it's really global at this point. The Far East has really come back to life in a full way. The Arabian Gulf in particular is, you know, the refineries there seem to be going, you know, full bore producing, and that's creating a lot of export volumes out of the AG on a long haul basis, which is great for ton mile demand. So overall, things look really good. There's a lot of talk. I know we'll talk about it later, but you know, there's a lot of activity in products also around storage.
As you, maybe Robert, maybe Jacob as well, or anyone basically, there's a lot of question marks right now that we have a lot of crude oil flow on the market, and there's clearly a lot of buying interest. It's being used potentially for on-land storage and dipping into floating storage. On the refining side, are you guys seeing any noticeable changes in their behavior in this demand environment?
I think if I could just start, Omar, is that first of all, you made the comparison to crude, and of course the headline of a VLCC at 100,000, 130,000 or whatever is spectacular. But if you look at size for size or dead weight for dead weight, you know, LR2s approaching 60 is every bit as good, or MRs approaching 30 is every bit as good as what's going on in the crude oil market. So even though the crude is getting the headline because of the actual biggest dollar sum, they are the biggest ships, and dollar for dollar, you know, the product market is doing just as well as the crude market is doing. The behavior we're seeing, as Anthony alluded to, is that, you know, they're taking the cargo and they're starting to, in size, start to talk through storage. And we're seeing a lot of arbitrage activity, very unusual, you know, behavior at the moment. You're seeing even all ARBs all over the place open. You know, for example, you know, obviously we talk about gasoline, diesel, jet fuel, but you're even seeing naphtha ARB opening between the US and China and Japan, for example, which is an extraordinary long distance, which is helping out.
Yeah. Maybe Eddie, are you, when we were thinking about the market and as it is today, it's very strong. There's different trade routes, as Robert is mentioning, new ARBs. Are you seeing time charter activity picking up to a meaningful degree? We saw some, maybe 6 months ago when the market first came to real life, there was talk of time charters, never really materialized. What are you seeing currently?
Yeah, it's interesting. I mean, spot market is pretty healthy, but I cannot say that the same thing for time charters. I mean, it's quite difficult to find lengthy time charters now. I mean, the maximum you can do is a year, and the rates have fallen since the end of last year by approximately $1,000, $1,500. So, TC rates now for a year stand in the region of 17,000, 17 plus if you're lucky, when in the end of last year they were at around 19,000. And I'm talking about eco vessels, non-scrubber fitted. It's interesting to see that charterers are a bit reluctant to take in tonnage, considering that what is happening now with the virus situation. I think everybody's a bit skeptical about how the market will be in the future and in the near future in the next quarter. Because for the long term, we're all very positive. Yeah.
So then, Jacob, with the big fleet and historically, being involved in charter in, charter out, and short-term trading, how do you feel about being long the sector right now and then potentially going longer by chartering in tonnage, given that there isn't that much demand, but rates seem to be, demand for time charters, rates seem to be on the lower end relative to where the spot market is?
I think our position right now would be that we are pretty long. We've got basically all of our vessels in the spot, and trying to maximize our earnings there is good enough for us. I think it's a bit early to call what would be the right time to then take further positions in this. And but obviously, if it is so that we can see that this market is still holding up, and that other sectors are really under pressure, let's say that certain company structures may be engaged in container, dry, car carriers, other sectors which I unfortunately would see having problems earlier. And if they are also engaged in tanker, maybe that's the time to think about going longer. For now, I would think that most of us will be working towards creating the best possible balance sheet and then sitting on the fence a little and see how this all plays out.
Makes sense.
I would like to add something to that because for us, time charter is also an important part of our strategy, and we have been covering quite a lot of our fleet throughout last year. We started off with very little coverage, but we managed to fix some good contracts at increasing rate throughout the year. And I agree with Eddie that there is a difference right now, especially if you want to go longer than 12 months. For 12 months, the rate is still quite firm, but not as firm maybe as they should be given where the spot markets are today. But there is a huge difference if you want to go already from 12 to 18 months. We have been discussing some opportunities, but decided not to pursue them now, not to take additional coverage because of this. And of course, we are already quite covered, and we are also very positive on the short-term outlook, but there are a lot of question marks out there. So this uncertainty is seen by everyone, not only by us, of course, also by the charters, and that probably explains why the TC market softened so much for longer periods, especially.
Yeah. Maybe Tony, we addressed this a little bit earlier in this panel, but just the thought of the use of cash. There's clearly been, as far as I've covered the shipping markets from the Securities side, there's been a lot of pressure on management teams to continually try to build up as much cash and pay it out to shareholders. You guys recently changed your dividend policy. from a variable payout to something a bit more, I'd say, big picture looking. Could you maybe discuss that? What you guys did and why you made that decision to go away from variable to something more holistic?
Yeah, it's something that we've been kind of deliberating and kind of agonizing over for quite a long time, and just really came to the conclusion that our job as a company, as a board, as a management team, is to focus on long-term value, and we just felt that there's just way too much attention placed on dividends in this business. Just definitionally, unless you can find a magical pool of investors that don't mind a return of capital dressed up as a dividend, there's really not a lot of value in dividend policy per se. It's really about maximizing total firm value, and that's what we wanted to pivot to. So we framed it up as a capital allocation policy, which is increasingly common with U.S. industrial companies. And our plan is to, and what the board has agreed to, is that we will be very forthcoming about what our priorities are on our quarterly calls, and that will change over time. But at the moment, we feel, given where we are, even prior to the coronavirus outbreak, given where we are cyclically and in terms of our balance sheet, we felt that that our number one priority should be debt reduction or deleveraging. And that will remain our priority until we get it down to, roughly speaking, 40% debt to capital. Other opportunities may come along. We'll assess them, as and when they arise. But that really is our priority now. So we'll just see what other companies decide to do over time. I think that having gone through 3 very tough years in the business, where we've all paid out or lost a lot of the value of our companies, to then without rebuilding that, to just start paying out dividends, just seems to be little bit contrary to focusing on long-term value creation. So.
Yep, that's fair. And you guys made that decision basically irrespective of what's going on with coronavirus.
Yeah.
And maybe Craig, I'll go to you on this idea of you guys have a buyback. How do you, and others as well, feel free to join in, how do you think about it right now in this marketplace where it doesn't make sense despite the valuation discrepancies? Does it make sense to still buy back stock as a use of cash, especially given the backdrop of governments worldwide coming up with stimulus packages to help resuscitate the economies and giving cash to the people? How do you think there's a change that would be oncoming here over the next few months as people, as stakeholders look at companies that are flush with cash and what they're doing with it? And does buying back stock have some sort of negative attribute to it from the big picture? And does that force you to change?
Yeah, I don't know about that. I would tend to say that first and foremost, you need to feel comfortable about the near-term outlook for your industry. And one of the things that we're sensitive to is just we're in completely uncertain times, and so freight rates are quite good. Cash flow is a colleague of mine indicated cash flow is everything. And so in the near term, things are quite good. The question is, how long does that last? Ultimately, you need demand. And so we have storage opportunities on crude. We have storage opportunities on the product side of the business. Both of those inure to higher rates. And so rates in the near term look quite attractive. But ultimately, we need to see the world come back to normal. And so I think even though probably the most attractive thing you could do relative to your share price today is probably buy back your shares, but at the same time, cash is quite important. And so I understand Tony's comments. I'm sort of a low leverage kind of guy in general in shipping. I think a lot of shipping companies have too much leverage. And so I can certainly appreciate that. But I mean, you know, if you're trading 50 cents on the dollar, that's a completely compelling argument. The question is the NAV solid? And so that's the thing that you have to be convinced of.
Yeah. Robert, what do you think of that? Obviously the valuations are at big discounts relative to NAV. What do you think with that incremental dollar coming in? Is it, do you hold on to it, or do you think about buying back shares?
I think we just have to look at the big picture. So, you know, the market has been, the stock market and your stock prices have been betting against the product tanker companies since the second week of January. Since the second week of January, people have been thinking in the stock price that rates will go down. In reality, since the second week of January, rates have not gone down, they've gone up. We have, as a sector, I mean, there are a few sectors, I think, in the whole world outside of the tanker sector that you're getting sequentially stronger earnings. I mean, the fourth quarter, the sector, the first quarter earnings are going to be better than the fourth. The second quarter guidance right now is going to be better than the first in the sector, and year over year too. And that's great. So everything indicates strong cash flow, et cetera, et cetera. But I simply think that we serve our shareholders better right now in focusing all our efforts on the safe running of the company, and not, you know, spending time on the stock screens. And this is coming from, you know, myself, who normally would be very happy to do the trading, etc. But what's most important is the actual operations of the ships right now. The stock, the companies will probably trade below net asset value, even if we get a clear sight of longer term earnings for some time, because the stock market itself will take a little time to repair itself. So I don't think you're really giving up that much opportunity at the moment by not buying stock. And what you are doing is you're giving your long-term shareholders, you're giving your new shareholders who are accumulating stock at great prices a much safer investment. Because what we can see out there is not just the short-term cash flow is great. Right now, they're pricing this sector as if these companies have liquidity issues, which, you know, clearly they don't. Right now, the short-term is fantastic. It's powering up the companies to get through whatever. And the long-term fundamentals are getting better all the time, in the sense that what's great to the product market is the supply side. Supply growth will probably go negative pretty shortly as a combination of, you know, just, well, it's neither a combination of aging as well as just no new buildings. But it's not the imperative right now to maximize the value of the stock through buybacks. The imperative is to give your long-term shareholders the platform from which they can invest in and get great returns in the future. And then later we can reward their confidence and trust in one way or another by giving them, you know, valuation, return on capital at that point through buybacks or greater dividends.
Yeah, I'd like to add to that I totally agree with Robert's comments. We entered the year thinking that we approved the share buyback program, and we thought that we were going to have an opportunity to do quite a lot of that, given where our share price was. And we started it off, and we acquired less than $150,000 back of our own shares. We wanted to do it gradually to see how the market panned out, and then maybe accelerate if the markets confirmed that strength throughout the year. Of course, then the coronavirus outbreak and the ensuing developments made us slow down and altogether stop that buyback program for a while. We then bought another $100,000 or so back of our own shares at very discounted price. I mean, we were trading at around 30% to NAV, 70% discount. So it was such a big opportunity that we decided to, you know, only in a marginal way to pursue it. But our priority is, as Robert's, it's the same. It's to deleverage, and to ensure that the companies are there and strong and able to pursue opportunities over the next 2 years. Right now, we believe we're going to have a very strong year this year, but of course there are concerns about what then that might entail for next year. And so we want to have ample liquidity to deal with a weaker market if there were a weaker market in the future.
Yeah, good points. Maybe to that point, in what Robert had said also as well, is that we're looking at new buildings going negative or the growth going negative. Maybe Eddie, given the order book is low across the board, shipbuilders are obviously they must be looking for business. What have they done in approaching you and trying to win orders from you? Are they doing anything different? Obviously, 7 or 8 years ago, it was the eco-design concept. There's a lot of talk on propulsion technologies. Have you noticed the yards getting more aggressive in trying to win business from you?
We have not been in a discussion with shipyards, so I want to make that clear. But our impression is that design-wise, there's nothing new in the market. There have been experiments in larger sizes, and as you know, larger sizes use alternative fuels, but not in the medium range segment. So we haven't seen anything besides very few vessels which have done dual fuel designs. We haven't seen anything really dramatic changing from the shipyards. We have not seen new technology coming out. And certainly the shipyards have not approached us with anything different than what they used to a year ago. The only difference today, I must say, is that prices are softer. And it's somehow easier to find finance, especially in China and Japan, in case you're building in local shipyards. So there are incentives to build in local shipyards, and you can find a financial institution to back you up. But as far as new designs are concerned, and I haven't seen anything in the market. I don't know if the larger companies which are in the panel have seen anything.
Jacob, you obviously earlier this year, it was maybe late last year, you'd ordered a couple of vessels. Could you maybe give a perspective on what, how you got comfortable with ordering those ships in the first place, or what was the main reason behind it, and were the yards willing to offer anything to get you on board?
I think for us you're right, we ordered a couple of LR2s that will deliver next year, and we're still very comfortable with that investment. We do see ourselves as a logistical company that service our clients, and the LR2 segment we like to have just a slightly bigger footprint. So there's not much more to it than a design we know, a shipyard we know, and a price that was attractive. And I think, as Eddie also alluded to, when you are a constant player and a repeat customer, you get good terms, and I'm sure shipyards today are approaching their repeat clients to try to induce them to do more business. I think the current environment where you really have a lot of uncertainty, and has been alluded to by all the conversations on this call today, none of us, we can see the immediate future, but we really just have to be prepared for what comes next. And I think that will lead to that the current sort of really slowdown in new building ordering will continue because of the uncertainty about the market, and of course about the uncertainty about the future propulsion system. So I think today is even more clear that the number of new builds that will come to the market will really dwindle and decline in the coming years.
Yeah, that seems very logical. And it's, maybe Tony, have you seen any updates from your side onto what is the right technology? I know it's a question that we've all asked ourselves and we can't seem to really answer. Any updates you think is something winning out, or what happens for us to reach those 2030 targets?
think a lot of work needs to be done by the IMO first and foremost to establish what the rules of the game are. There's really no resolution yet to how to make pricing of green fuels feasible and attractive. That's one big issue. They haven't even been able to come up with operational measures yet, which would affect ships in the water. So I think we've got a long way to go. Our understanding is that the IMO is under pressure from the EU and other kind of pressure groups or pressure groups to move faster. So let's see what they come up with. In terms of actual technologies, there's a range of things being discussed. And what occurs to me is that, first and foremost, in principle, we need access to fuels and technology which minimize the incremental cost on board the ship, which minimize the incremental difficulty of carrying and getting those fuels to the ship, and which represent the greatest energy density and ease of carry, right? So, I think those principles are going to drive discussions and decisions around this. In the end, there'll probably be a lot of things used. So, for example, hydrogen might be perfectly acceptable on, smaller coastal type units where they can work, use it on a, kind of on a pressurized basis. Methanol or ammonia might work in other occasions, and maybe LNG, green LNG. The attraction of LNG at the moment is that it's so cheap, right? Green LNG will not be cheap, and the incremental cost on board a ship is not cheap, right? So, LNG might be an interesting transition fuel that people talk to, but longer term, it's hard to imagine that that's the obvious winner. So we need the rules. We need to understand the rules of the game. There needs to be consistency so we can plan around it and dedicate capital to it. And then it's probably more up to the yards to come up with the designs that we can then consider. So still very early stages, still a bit frustrating in terms of where the IMO is right now.
Tony, any perspective on sort of a sense of timing on when the IMO would be coming with a set of guidelines?
We've been a bit distracted the last few weeks. So, a month ago it was all about ESG, right? Now it's all about COVID-19. We would hope that they would figure out at least the operational aspects of this sooner rather than later. We're all for it. We're ready for it. But there's just so much work that needs to be done. Even the reporting mechanisms are just so imperfect. They're beginning to collect a lot of data. I'm not sure the data means anything. So that's one of the big challenges. But just kind of coming up with whether it's goal-based measures or speed limits or load limits on engines, there's got to be a way to address, take the first steps on operational measures. So we would encourage them to get on with it virtually, I suppose, now. So.
Yeah.
But I would say one thing is all of that sort of leads to holding off on ordering new ships as an industry. And so, yep. So in the near term, it's going to be good, I think, as a result of that.
Yeah. Maybe then just to kind of transition to maybe the discussion on scrubbers, which has been, that was a big topic, last year, and it's really basically COVID-19's taken over everything at the moment. But, Robert, you guys have a very extensive scrubber installation program. The spreads come in, there's been disruptions at yards. Has that at all changed your perspective on installing the remaining scrubbers you have planned?
I think what's actually changed the perspective is just simply the massive strength in the LR2 market right now. When you've got ships fixing where they are, you will do what you will to postpone scrubber fitting regardless to take those levels. Where ships have got compulsory dry docks, you'll continue with most likely with the scrubbers, because going forward, we're slowly coming to the end of our scrubber fitting anyway, and going forward, with a change of crude, you can, if you're going to have more Russian crude, more Middle Eastern crude, and less US crude, you could argue that at some point later in the future, that the high sulfur fuel the spread will be wider again, just because of the change of mix. in the short term, again, short term, you're just trying to do what you can to maximize the revenue intake you're taking. So if you had the choice to postpone a scrubber fitting, I think that most companies would do that at the moment, just simply because of the rate strength in the big ships.
Yeah, so we've seen that, I guess, with the crude tankers last year and the beginning of this year, but now it sounds like it's transitioning to product as well, where you're going to be
well, the rate, yeah, because the rates are just so high.
Right.
Yeah. Yeah. I guess maybe
you could double the cost of your scrubber is what Robert basically saying.
Right.
Right.
Yeah. No, exactly. And I think maybe just transition maybe to another idea, obviously, is interest rates have been coming down quite a bit, and it opens up the opportunity for real refinancing. Maybe Eddie, on your side, or maybe Carlos, both. What do you think about the opportunity of refinancing? Is that something that you think across the board we're going to be seeing banks willing to do, or ship owners for that matter, willing to be able to refinance at much lower interest costs?
And, LIBOR is what it is, so it's coming down, but the spread is the same. It hasn't changed. We haven't seen anything dramatic happening there. But the financing wise, you can always find alternative financing. A few commercial banks are there. Now, whether it makes sense to refinance a few things, situation is the same as it was for the last quarter. Nothing has changed. The only thing that has changed is the LIBOR, which is much more competitive. It's decreasing. So that's the only change we've seen in the last quarter.
Yeah.
On our side, I agree with that. I think that it depends on how exposed you are to the LIBOR. I mean, if you are covered through interest rate swaps or not. In our case, we are 70% covered, but we still will have a benefit from the lower rates. But I don't see that as an opportunity to refinance. And generally speaking, I would say that the traditional European banks' appetite for shipping exposure was on a downtrend before the outbreak, and I would say that it is even more so now. Although we don't have any evidence of this, direct evidence of this, we just have a sentiment from discussing and talking with banks, because we haven't had to refinance anything this year, and we don't have any major refinancings coming up soon. We have some vessels to refinance in September, December. But what I would say is that prudently, given we all mentioned there's a lot of uncertainty out there, but we are still benefiting from a very strong market. It could make sense to refinance a bit earlier than you would, just not to wait for the last minute, in case the market scenario changed the worse because of geopolitical reasons, or because this virus, the consequences of this virus last longer than currently anticipated.
Okay, that's helpful, and I think we're getting to the end of the panel time. We've just gotten the alert to wrap it up. Does anybody have anything that they would like to finish off with before we conclude?
Omar, I wouldn't mind jumping in and just mentioning something that Robert alluded to in the beginning, which is, I think, really important for investors and anybody listening to understand, is that the headline rates that you hear about VLCCs or Suezmaxes sound very impressive, but if you do the math on a capital adjusted basis, the returns are as impressive on LR2s, LR1s, etc. So, I think we're all enjoying a very strong market at the moment. And I just want to say that I find that the discounts to NAV at the moment, the pricing of shipping stocks generally, at least in the tanker space, are just extraordinary. And in all the time that I've been in this business, I've never seen anything like this, where you've got not simply asset values, but charter rates at the kind of levels they are today versus the current stock price. And clearly, there's a lot of uncertainty. But I really kind of question how much risk really is there at these prices, right? I mean, the physical market is doing well. The physical market pricing is still way up there in terms of investing, but the paper market is just dirt cheap right now. And I think that's just something that we'll all look back on and say, why the hell didn't we buy up all our stock? Why didn't we take everything out of our 401ks and put it into our own company stock? You know, why the hell weren't people buying it then? It's just it's really quite an unbelievable thing at the moment. So.
Yeah, no, it sounds like we'll be looking back hopefully in 6 months and saying, wow, what a tremendous opportunity this was.
Yeah.
Okay, all right, well, thank you. Thanks everyone for being here. And I think this was a good discussion, and we'll stay in touch. Exciting times.
Okay.
Thank you, Omar.
Thank you.
Thanks, Omar.
Thanks, Omar.
Thank you.
Thanks, everyone.